Most traders are making the exact same mistakes every single time they fail an eval. Believe it or not, it has nothing to do with strategy. In my trading career, I've passed and blown more accounts than you can even count. And in this video, I'm going to walk you through my process of trading evals, the changes I've implemented in order to see the best results, show you the exact trades I took, and break down the one rule I think makes the biggest difference between passing and failing evals. But before we get into that, Lucid has just recently given me a discount code, and I personally believe they're the best prop firm in the game right now. These trades that I'm going to review later on in the video are with my Lucid account. So if you're already using Lucid or want to try them out, use promo code DROBO to get the biggest discount possible. They really are the best prop firm right now, and they're by far my favorite. They're the ones that I use as of right now. So I highly recommend trying out Lucid if you aren't already. Now, before we get into any actual trades, I want to talk about the main reason why many people, including myself at times, struggle with continuously failing these evals. And what I think this all boils down to is people do not treat their evals like they are funded accounts. So now what exactly do I mean by this? Because this can mean a lot of things. It can be something as simple as sizing up too much, using too many contracts. Something like setting your stop losses too tight. You're setting stop losses you'd never take on a funded account, but just because it's an eval and you're trying to pass it as fast as possible, you'll change things like contract sizing and stop loss placement in order to get the quickest trade that you can be in and out to get your eval done with as fast as possible. Another common problem I see with traders is they will continuously trade their evals throughout the day and in the Asia session when they know they shouldn't be trading or when they normally don't trade, just because it's an eval. And again, they're just trying to pass it as fast as possible. So they will take entries that they wouldn't take on a funded account. They'll trade at times where they would never trade a funded account at. And they're taking these low quality, low confidence setups because they see it as just an eval. And this is also where the idea of gambling comes in. Because at what point are you gambling on an eval versus trading the proper way and the normal strategy that you would trade a funded account? Because if you treat your evals as less important than you treat funded accounts, then it already seems like you're leaning towards the gambling side rather than the quality setups and good trading discipline side. But now there is another side to the story, because obviously when you're trading an eval, you have no chance of actually making money on it. And this does incentivize you to pass that eval as fast as possible. So even though you can't actually make any money off an eval, once you consider the actual price of the eval and then the cost of blowing multiple evals in one session, the numbers start to really add up. So in my personal opinion, the best way to trade evals is to find that sweet spot to where you can pass the evals in a reasonably short amount of time while also following good fundamentals of trading and sticking to your strategy and your plan that you have set up for trading your funded accounts. And in my time trading, the numbers that I've found to be best in terms of stop loss and take profit placement when trading both evals and funded accounts are shooting for approximately a $500 to $1,000 risk and a $1,000 to $2,000 reward. And my goal for setting up these trades, I'm not looking to take a $1,000 risk. I'm looking to take more of a $500 risk, but sometimes it doesn't always work out perfectly. So you have to give yourself a little bit of wiggle room to where you start getting into $600, maybe $700, $800 risk. But I'm not actively seeking out $1,000 of risk per trade. I'm really looking for approximately 500, but sometimes it just ends up being a little bit bigger than that. And I'm never really looking to size smaller than 500 risk per trade. Another very common problem I'll see with people trading evals is that they're sizing extremely small and taking very, very small wins and very, very small losses. Now, again, the problem with this is you have no possibility of making money on an eval. So you're incentivized to pass that eval in a reasonable amount of time if your goal is to make money. And what I see time and time again is people are taking $100 wins, $200 wins, and that's with them taking their ideal setups. Me taking my ideal setups, I will get $1,500 in one trade. That will get me to my daily profit goal on my eval, and then I can completely be done for the day. If you're trading so small that your ideal trade setup is a $200 win, you're going to have to hit so many perfect trades in a row without losing that it is statistically worse to be trading such small sizes if your goals are to pass that eval and eventually take a payout on a funded account. So with that being said, we now have the foundation for the way that we're going to be trading our evals. We're going to go ahead and review the two trades that I took on my most recent Lucid evals in order to get them to funded. Okay, so getting into the first trade that I took on my evals, just so you guys know, at this time I was trading both Top Step and Lucid evals, so that's why I'm going to be switching from two different graphs and also two different accounts. But anyway, getting into the context of this actual trade right here, so during the market open, we just had a huge sell-off. We had a little bit of a pullback, and then we started another smaller downtrend, as you guys can see right here. So all I'm trying to do at this point is join in on this downtrend. I have my daily price target, my goal for where I expect price to hit at some point during the day. This is ideally where I want my take profit to be placed, but since I'm just trading an eval, I actually don't have to worry about this. My only goal for trading an eval is to hit $1,500 of profit in a single day. That's the price target for evals like Lucid and Top Step. They want you to get $3,000 profit, but you have to follow a 50% profit consistency rule, meaning that one day be 1,500 and then another day be 1,500. And then if you pass it in two trades that are both $1,500, that gets you to your $3,000 goal. So that's what I'm trying to accomplish here. Just take one trade that hits $1,500. So prior to, this would be a 100-point move. I don't need to catch 100 points. I only need to catch basically half of that, maybe a little bit less if I'm trading two contracts. So that's what I end up doing here. I don't have to worry about hitting this. I just have to worry about where I'm placing my stop loss, and then my take profit will be somewhere along the way, approximately 40 points from my entry point. So with that being said, now we can look at my actual entry, where I place my stop loss, where my take profit ends up being, and see how this trade actually works out. So we're going to start the recording right here, and as you guys can see, it's chopping around a little bit. I'm just waiting for this candle to become a rejection candle, and if and when that happens, that's going to signal me to see that we have failed to reverse from the place that we're at, and we're hopefully, ideally, going to continue this downtrend. Obviously, prior to this, I am bearish on the day. So I expect, like I said before, I expect price to go down to this 27,185 level. So I'm waiting for rejection. I'm waiting for downtrends. So I'm seeing high time frame downtrends. I'm seeing low time frame downtrends. And now I'm seeing price reject off of this slight pullback that we had here. As you can see, this is where I get my entries. I set my stop loss to the top of the wick right here, and I'm going to pause it right here because normally I would want my stop loss at a place like right here to where my trade can actually have a little bit of room to fluctuate up and down, you know, give me some time to be in drawdown. I don't want it to just instantly shoot to profit. However, this specific trading day was not like a normal trading day. There was so much volume, volatility, and really directional movement straight downward. So in a perfect world, if I could have done this trade again, I think the only thing I would have changed is I would have changed to one NQ contract and either set my stop loss here or here rather than setting it so tight. I mean, I say so tight, but at the same point, this is a 20-point wick that we have just right here. So it's a weird trading day, and in the moment, obviously things move so much faster. You can't always account for what is going on in the craziness near market open or in times of extreme volatility. So in a perfect world, I think I would have just sized down and then still taken the same trade, same entry, but my stop loss might have been a little bit different, and then obviously my take profit would have been closer to my target price goal that I have set down here too. So it kind of works out in that sense too. But like I said, things aren't always going to work out perfectly, and I still got an entry that I liked. This stop loss is also good because the price has been rejected from the same level twice now, and this most recent one is hopefully going to continue this significant downtrend that is a lot bigger than it actually looks from what we just have on the screen. It had dropped hundreds of points prior to this, so this was a pretty significant fall off, and just everything about the day was telling me that we were just going to continue shooting straight down, and eventually that is what happened. All right, now let's continue on and see how the trade actually played out. Like I said before, this was just such a heavy directional day that the moves being made were so big, and they were basically all straight down. So once I saw a little bit of pullback, this just made me even more confident that we were going to continue this downtrend. So as you can see here, chopping around a little bit, but it doesn't take much longer until we actually see a pretty significant sell-off. And then at this point, I'm moving my trade to break even because we are very close to our take profit. And the way that I like to do break evens is you let it run initially, let it have room to chop around a little bit, But as you get close to your take profit, that's the time where I think moving to break even makes the most sense. If you move to break even too quickly, it makes you take way too many break evens. It doesn't give your trade enough breathing room. It doesn't let you go into a little bit of drawdown. It's unrealistic to expect you to only ever be in the profits or in the green on a trade. So if you're moving your break evens too quickly, you're going to see that a majority of your trades are going to go break even. And then a lot of them that you went break even on would have ended up being full profit trades in the long run if you just never would have touched them. It's something that I notice with a lot of my trades. It's something that everyone else notices, and it's a mistake that you really need to correct. I know it goes against human nature and human psychology to not lock in your profits or take a free roll on a trade, basically. But in reality, how often are you going to take a trade that's literally only green, or one that never comes back to your initial entry point? It's just not realistic, and it's a bad habit to get into. It's an easy way to basically just negate all of the good trades that you make. And really, at that point, you're just balancing yourself between taking a bunch of break evens and losers, and you're really never letting your winners develop or play out. So if you're moving to break even too quick, the only outcomes are going to be full losses and break evens. For the most part, you're going to every once in a while catch a winner that literally only is in profit. But again, it's just not realistic. But moving forward, something that I've been trying to work on as well, don't move to break even too quickly. In this case, we're like 10 points away already. All right. And now, as you can see, we wicked into our take profit once. So on my other accounts, you can see right here, my price target has been completely taken out. So on these accounts, which these are my Lucid accounts, I'm up 1,500. And then now we go back to these accounts right here, and we're almost hitting that 1,500 profit again, just so close, bouncing in and out from that one little tick that we missed it by. And then as time goes on, it still chops around a little bit more. Full take profit is hit there as well. Okay, so that first trade that we were looking at was kind of a special scenario. It's not something that comes very often, those days of extreme volatility where price is really only moving in one direction. Most days it's going to be chopping around a little bit more. There's going to be more ups, more downs, and it's not going to move 50 points in 1 or 2 minutes just in one direction. So that was a little bit of a weird day, but either way, it was the first day that I traded, and that's how my trade worked out. So now moving into a little bit more normal situation right here. As you can see, we have another significant downtrend that we can see very clearly. We have lower highs consistently being formed. And as you can see down here, there's a little bit of consolidation or chop. But one thing that I noticed is that price was rejecting very hard every time that it got up near these levels. You can see right here, we dropped from 27,836 all the way down to 27,816. And then we come back up, and then we reject it again. We come back up, and now we're rejecting for a third time, and I see this as a pretty good instance to catch a continuation short right here. Obviously, high time frame, I'm looking bearish. And then once the low time frame decides to line up with that, which it has been for the past little bit, this trade was actually taken during the Asia session, as you can see right here. Which I do trade Asia regularly, semi-regularly. Whenever I see a setup that I like during the Asia session, I'll take it, but I'm not actively watching Asia every single day. But in this instance, I saw a setup that I liked. I saw a continuous downtrend, and I was ready to try a short right here. So of course, Asia session is normally much slower than the New York session. So right here, I'm about to sell 4 NQ contracts, which is normally not going to work during the New York session, but this is the Asia session. Everything's much slower. I can set the stop loss that I want using the risk amount in dollars that I want to use here with 4 contracts, and that's what I end up doing here. All right, so let's see how this plays out. There's my entry right there, and then you can see if just the instant that I entered in, I was down $155. You have to love the spread on these Asia session plays. And then as you can see here, this is the other trade that I'm on with my other accounts that I was also trading evals during this time period. You can see I got a much earlier entry and obviously a much better entry as well. But what's good is with more contracts, if you find future entries, you can size up a little bit as long as you're still taking good stop losses and stuff like that. But obviously this is my original play at 2 contracts, and then later on we get in here at 4 contracts, both with similar take profits, same amount of money, but this was just a little bit safer of a play that I got into earlier. And then when I got a second chance to enter in the play on my other set of accounts, I took advantage of that as well. So this trade in total took about 45 minutes to happen. So over time, it's going to chop around for quite a bit before we actually see the take profit get hit. So I'm just going to let this play out. As you can see on this trade right here, I have not moved to break even because just like what I was talking about before, I want to give my trades a little bit of breathing room to where they can go up and down. I can be green for a little bit, red for a little bit. And overall, I just expect my price target to be hit. I don't know what's going to happen between my entry and my target. So I'm just going to let the market do its thing while it's chopping around and hopefully getting to my take profit. But let's watch the rest of this trade now. As you can see, we still have 5 minutes to go left in this trade. So we're going to watch it chop around quite a bit more. And it is now nearing our take profit for both of our accounts. At this point, I have now moved to break even on these accounts because, again, like I said before, we're only 2 points off of our take profit. So at that point, if it decides to go all the way back up, I'm risking $1,400 of drawdown in this instance. I don't want to take a loser if price decides to flip on me or whatever. If I'm up $1,400, almost $1,500 on a trade, I don't want to turn that into a full loss, especially on an eval when that becomes much more important. But in terms of what I've got going on right here, this is my time to move break even while we're about to hit my price target. We're going to chop around a little bit more. It comes back up. And then right there, you can see with that huge wick, let's see if I can get that again. Huge wick down, hits our take profit, $1,500, and then that becomes $3,000 for both of those accounts. So both of those evals, one set of Top Step, one set of Lucid, both passed in 2 days, both taking pretty similar trades. So in summary, start treating your evals much more seriously. Trade them as if they were funded accounts. Even though you can't make any money from the evals until you turn them into funded accounts, at the same time, they still cost hundreds of dollars at a time. You can still pass your evals in a reasonable amount of time without full porting your account every single trade. And then on the flip side, if you're taking multiple weeks or even longer just to pass one eval, consider sizing up in that instance or going for bigger plays, bigger take profits, because there is a sweet spot between full porting your account every single trade and using one micro for every single trade. They're both not optimal ways to trade the accounts. Somewhere in between, usually 1 to 2 NQ contracts, is a sweet spot that I've found to be the best. But of course, market conditions are going to change that. But generally speaking, around 1 to 2 NQ contracts is going to be optimal for these 50K accounts when your goal is to make a couple $1,000s before you lose a couple $1,000s. Trading way too small or way too big is going to make these things take either way too long or it's going to make you blow accounts way too fast. So again, just finding that sweet spot and trading based off of fundamentals rather than gambling is going to be the difference maker between you failing evals and passing them.